Hello and welcome to another update video about DOT. On the Polkadot chart, we continue to be in this correction, which has started, well, the overall correction started early in the year, right? It started actually in February. Since then, the price has been coming down, wave 1, wave 2, wave 3, wave 4, and now wave 5. Each wave, as you can see, is longer than the one before, as it seems. Based on that, we have also calculated this support area, I think, actually, if I remember correctly. Let's just double check that. So what we see here on this chart is that if we compare the length of the wave 1 with the length of the wave 3, yeah, we can see wave 3 is longer than 1. That makes it typically quite likely that the wave 5 is going to be longer than wave 3. Now, it doesn't have to. The only condition is that the wave 3 is not the shortest one. So yeah, okay, our target area, goes all the way down to the 100% extension, basically based on the assumption that waves 5 and 3 are the same length, because wave 1 would be the shortest. There is no limit to the downside. I mean, it can still go lower than that, but that's sort of what we said we go with, right, as targets. These targets were already reached, at least the upper range of this, or the upper boundary line of this, let's say, support area was already touched on the 11th of September. Price reacted to it, yeah, and now we are coming down to it again. That's the expectation anyway. We talked about a wave pattern here, which is unfolding it as a W, X, Y, X, Z pattern. A very complex correction. The price is moving in a descending wedge. We need to see if this eventually will break to the upside. It could do. And that could have some bullish implications. But really, if you zoom out again, or if we zoom out, you see, until the price breaks really to the upside of this, well, descending price channel, we can't really say that it's very bullish. Okay, it's just moving within a range, basically. But obviously, we can make some more assumptions based on the lower degree wave counts and structures. And we had another trade setup that worked out nicely. Decent reward to risk. Here, our resistance area, yeah, which was between $4.07 and $4.12. That was, again, respected by the price. The price reacted to it and is now coming down, potentially already in the C wave. So the assumption was that X wave already finished here on the 21st of September. That was a triangle, this wave X. And then we said, okay, the Z wave is obviously an ABC structure. So it's likely the A wave completed. I gave you resistance for wave B. Again, this was respected, and the price is now, as you would assume it, is now starting to come down in wave C. Now, we now need to break below this swing low next at basically $3.95. Need to get below this level. Also, this dashed line was one of our previous targets. Need to break below that level, and then it could probably come down to $3.84 next. That was another Fibonacci relationship we calculated before. Also, what we can do now that we have a potential top in place for wave B, we can take the length of the wave A, we go to the high of the wave B, and we compare that with the length of the wave C. That gives us another target now at $3.92 and potentially the 1.618 extension level at $3.81. Now, see, we can't say which one it will be where it will turn around, but these are all levels where the price has a chance to show a reaction. Especially here, I would say the $3.91 level next, because it is the Y wave low and it's the 100% extension. So we have a Fibonacci relationship, and we have this previous structural support. So there should be some additional support there. But first of all, yeah, it's doing what we want. And I guess we'll probably see a bit of a bounce here again from that $3.98 level, which we had here, which is also the 61.8 extension of the A wave, which is another level to watch typically. So we're now entering, if we go a little lower, we're now entering another range of support, and a support area to which you would normally expect the price to react, right? So there are various Fibonacci levels here. You can see there was also, as it seems at the moment, a failed breakout from this wedge pattern and quite a strong reaction to this resistance area. And the move up was very corrective 3 waves up, as you can see, A wave, B wave, C wave, and now this larger C wave seems to be coming down of the complex Z wave triple. I mean, this is a triple combination pattern that's playing out here, W, X, Y, X, Z. Very, very rare. But the very complex corrections that we currently see in the crypto market, they look more and more like that. Okay, not much more to add. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure you follow us on Instagram and Twitter. And if you're interested in the channel membership, weekly live stream every Sunday is included, and you get access to our Discord and Telegram chat rooms, plus a lot of educational content. And as a gold member, you get access to additional short-term market updates. Thanks a lot for watching. Bye-bye.